thing for me. I don't know one conflict for me. Okay, I'll test it. Okay, no be smart. Please drink one bottle of water from me. As in, okay. Oh, good afternoon, everyone. How are we doing? How many of you were here yesterday? Okay, okay. How many of you are just coming today? But did you stream yesterday? Did you follow us yesterday online? That means if you don't have the basic knowledge, it might be difficult to flow. So you might need to at least go on YouTube and catch up. So for those of us online, if you can hear me loud and clear, let me know. We want to start at exactly 2 o'clock. So we have 2 minutes to start. So for those of us that are coming today, maybe you're coming here for the first time. Some of you are even surprised that somewhere like this exists in Abuja. Hopefully there will be more like it in the coming years because the forex industry keeps expanding. It keeps getting better because more people are beginning to understand the amazing opportunity that you have in this industry. This is one industry that can really change your life that fast as far as money is concerned. So we're happy to have you. There's a lot to learn today, a whole lot. So let's get going. This is 2 o'clock now. So once again, welcome. My name is Shazokam. For those of you that don't know, popularly known as FX Daddy. I don't look like a big man, but we are big inside. Okay, so this is what I do. I trade forex. I've been trading forex full time for the last 4 years now, and I've made at least good money trading forex. And one of my greatest passion in life is to also help people make money. There is no joy in making money, and it's only you. It's more fun when you can look around and see that because of what you're doing, other people are also finding their own path and doing well for themselves. So hence we started this journey to teach. We have a vision here at TradeWave to help 1 million people become financially free by the end of 2030. So we are hopeful that you are part of that vision. We are hopeful that you'll be part of those 1 million people that can say that they were able to find their footing and they were able to attain wealth. See how tall this guy is. He's long. So, welcome. So, this for me, this is actually for me. I don't know for why other people do what they do, but for me, this is more of a very selfless journey for me because we give out more than it looks like we're taking in. And for me, I don't have any problem with that because at the end of the day, I know what I want to achieve. I want that by the time I hit a particular age, I can look back and be happy that I spent my years helping other people to build wealth. So, being or my journey to becoming a billionaire for me is not just for myself, but I want to look back and see that other people also took that step because I'm taking it, and they also become billionaires. Is it not a thing of joy? I've been able to, I read a lot of books, I follow a lot of people, and I've been able to look around. I found out that the happiest people at old age are people that have spent most of their years actually giving out to people. Most of the people that I found that lived like really happy, because I don't know for other people. I'm just introducing myself to you so you know where I'm coming from. I don't know for other people, but for me, I find it satisfying giving out than taking in. It is more satisfying for me. It gives me a lot of joy. When someone can look at you and say that because of this person, I was able to take so and so steps. And this is what it has brought for me. I told you, how many of you were at Trader First? Okay, fantastic. So I told you at Trader First that the guy that introduced me to trading, I don't know whether he's still trading today, but many years later, I'm happy that he introduced me to trade. He might not even know me by like recognize me by face, but if I see him anywhere, I'll know that this is the guy that introduced me to trading. Is anyone following? So what I'm saying that this is a journey of legacy as far as what we do here is concerned. On a normal day, what we teach, for what we taught you guys yesterday, is what people pay thousands of dollars to learn. And the truth is, not everybody can really, it's not everybody that can actually teach forex. There are some people that can actually trade it. They can trade it well, but they can't teach it. If you be sincere to yourself, there are lecturers you had in school that you know that they know what they do. You know that they know it, but to now pass the knowledge is a problem. You understand? There are lecturers like that, but this is something we teach well and we also trade well. Okay, so for those of us joining us today, I don't know how you people are going to catch up, but my prayer is that God will help you catch up anyhow. Okay, so we'll start with risk management today. But a very quick recap before we go ahead. Let me be sure that everybody's brain is still alert. We're entering a trade on Eurocard. Eurocard, our entry level, entry 0.2532. And currently the trade is on, the currency pair is on 2241. And we entered for a buy with a lot size of 0.39. First question, are we on loss? Loss or profit? Are we on loss on profit? Who is saying loss? If you're saying loss, raise your hand confidently. Eh? We entered a buy at 0.2532 and the market is currently at 0.2241. Are we on loss or profit? Loss. Anybody saying profit? If the person that says profit gets it, I owe you 20,000 naira cash now. So who is saying profit? Are we on profit? Okay, so we are on loss, correct. So the next question now is how much loss are we on? How much loss? Lot size 0.39. 1,300 what? Okay, let me do my own calculation. Let me do my own calculation. Okay, so what was your answer? 1,368. No. No. Call it again. That's $113 49 cents. No. So how did you get your own answer? Uh-huh. Okay. That your calculation, you're even going far. You're going far. You don't need to go that far. You don't need to go that far. Very simple. Move the decimal point to this point. 3.9. You don't need to start going as far back as 0.1 pip equal to 0.0 something lot size. Just move the decimal point. $3.9 per pip. That's what we are risking. So $3.9 multiplied by 291 pips loss. So we are on $1,134.09. So we are good to go. That means everybody is in sync. I usually like the second days of our free trainings because then I get to share stories now because we've handled all the technical parties today, which was which was boring. Was it not boring? Okay, so today we do a lot of talking because I'll be teaching you guys risk management, trading psychology, which is a huge part of trading. Most times when people come into trading, they only know the technical part. The only part people tell them or emphasize for them is the technical part. But they don't understand that at the foundation of every successful trader is risk management and trading psychology. If you play with these two things, you never make money in Forex. Emphasis on never. Because even a good strategy, you can be losing with a good strategy if your trading psychology is terrible. If your trading psychology is bad. Now, most times when I had one guy that came to me, said he wanted to learn Forex and all of that. So he said, according to him, that he's very good in mathematics, that he used to see all the charts I used to post, that he's a good mathematician. He used to like all those kind of things. I said, okay, no problem. So I told him, no problem. Why not? You can get on with the course. This is like last, when was that conversation? It's over 4 months now. The guy is still yet to be profitable till now. Because trading the forex market and making money is not a matter of mathematics. It's not a matter of who is better at mathematics. In fact, if you are more uh, uh, emotionally calculated, you'll be more profitable than somebody who knows mathematics. If you are more emotionally intelligent, know how to handle emotions, know when to trade and when not to trade, you are much more predisposed to success in trading than somebody who knows mathematics. So risk management is simply refers to a set of rules and decisions that allows a trader to effectively manage risk in forex trader. Every professional trader must have a good grasp of risk management. Now, risk management is simple. It was Warren Buffett that said that. How many of you know Warren Buffett? Okay, good. He's one of the richest man in the world. So he said the first rule of investment is don't lose money. That the first rule of investment is don't lose money. If you learn how to keep your money, you have greater opportunity to become success than somebody who doesn't know how to keep the money. Now, he's not saying that you should not invest your money or you should be scared of losing. But if you are very protective about your capital, you are more predisposed to chances of success than somebody who is very careless about their capital. So in trading, risk management is all about being able to preserve your capital in as much as you are actually trying to make profit. I teach my students that as a good trader, you are likened to a footballer. But in this case, as a footballer, you are both an attacker and a defender. You are defending your profit and attacking to make more profit. The ability to do both is what makes you an excellent trader. There are traders that are good attackers but terrible defenders. They don't mind taking risk. They are, as far as risk is concerned, they can go in, go hard or go home. But the day they go home, it's village straight. The day they go home, I told you guys yesterday that used to be my style of trading. Before, I used to be a very good. I can take $1,000, give me 2 months, move it to 12,000, 13,000, 20,000. That used to be my style of trading. But I found out that anytime I lose that money, most times I just feel like giving up, giving up trading. So I found out that it was a more detrimental way of trading for me. That's when I learned how to be an attacker and both a defender. You are trying to make profit, but however, you're also defending your capital. Because if you lose today, you need capital to trade tomorrow. But if you lost all your account today, what will you use to trade tomorrow? And that's why most calls, of course, I get charts every day on a daily basis. There is no any day I don't get less than over 200 minimum in a day. Different people, different charts, different issues. Some want you to solve their family problem, their grandfather's problem, their grandmother's problem. But at the foundation of most of those, especially the ones that talk about Forex, tell you how they have been on a journey, they've not made any money, at the root of them, you find out that at one time or the other, they blew account. And that's now made them become fearful about Forex. They will tell you that we have tried this thing. It didn't work. We have tried it before. They can tell you stories upon stories how they have tried and they feel like it's not working. But at the foundation of everything they are telling you, they are simply bad defenders of capital. So what makes a good trader is the ability to defend your capital, but also know how to attack for profit. It is okay. Imagine where you're playing a football match now. We've handled the defense part. Now let's handle attack. Imagine where you are a footballer and all your team is doing is defending. All your team is doing is defending. There is no attacker. They are just playing defense. Who will now score goal? I know people who are more of defense than attack. They don't want to lose anything. They don't want to lose shish. But that's not how life works. I read a book and the guy wrote in the book that a millionaire is somebody who, first of all, makes millions, loses millions, gives out millions, and invests millions. So a millionaire is not somebody that has $1 million naira in his account. A millionaire is somebody who is willing to risk the millions and also knows how to make the millions. So most times when people come to Forex, they are too protective. That's another problem too. You can't be too protective. You need to, of course, take risk. Life in itself is a risk. You coming here is a risk. In fact, as you're sitting, what if this building fall? Life is a risk. So at some point, you need to take risk. That's how people become wealthy. You need to take risk. That's part of life. You can't play it too safe. I usually tell people that it is he who is not taking risk in life that is taking the greatest risk. Because at the end of the day, you lose. Somebody said that some people live their life so carefully, avoiding mistakes, that at the end of their life, they find out that they never lived at all. So as a Forex trader, you are an attacker, you are also a defender. You don't want to lose, but you also want to make money. So there's a balance to it. That's where emotional intelligence comes in. Are we together? So that's all about risk management. I wrote here, risk management what separates men from boys in the Forex market. As a general rule of thumb, it is not advisable to risk more than 2% of your trading account for every particular trade. Now, I'll explain that and I'll put it in context. What your appetite for loss is relative. For some people, they can risk $10 and lose $10 and they are fine, nothing will happen. But there are some people that if they lose $10, the whole neighborhood will know that something went wrong. So risk is relative. There was one guy, I can't remember the conversation I was having with somebody sometime last year. So he was telling me how that he has lost money in Forex, that he has lost so much money, that he has tried, has failed, that the amount of money he lost in Forex. So I don't even know what sent me. And I went to now ask him, okay, how much did he even lose? The guy said $350. I know. I didn't know what to, I don't want to act like is this long? Because of course you want to be very emotionally to just sympathize with him. I'm like, wow, hey, that's big money. I've lost money. Personally, I've lost good money trading Forex. And I don't like talking about the losses, especially when I'm teaching, because I found out that sometimes it can be counterproductive, but I need to share with you. The truth is, the reason why I lost the way I lost was because I didn't have somebody telling me these things I'm telling you. I was just doing trial and error. I told you how I started learning Forex. After a seminar, I just went and started watching videos. Watched videos till about 2 a.m. that night. I was still watching videos. That was how I just started. The next day, I just funded a small $5 I had. Funded $5, thinking that, I mean, we go blow. It's our time. So that was, there's this chair here. You can bring it somewhere here. So that was how I started my journey. So it was a journey of trial and error for me. I was just trying things, seeing what can work, what will not work. So that was why I lost all the money I had. Even when I was doing my internship, I had become profitable self during that time. But I saved money throughout my, do you know how to save money for a whole year? Put it into Forex and lost it. $2,400. That was my first big loss. Even after then, I've lost good money. Good money. But at the end of the day, of course, I've made more than I've lost. And most times when I talk about my losses, what people don't know is that when I say I lost money, it's the money I made from Forex too. So I made it there, I also lost it there. But it's a painful thing. Money that is your money is your money. Is it not so? Whether it's in the market or not, it's your money. Okay? In 2019, 2022, between 2019 2020, I lost over $23,000 cumulatively. One time 3,000, sometimes 6,000, one time 12,000, that time 10,000, just bouts of losses like that. But I'm not saying this to scare you. Like I said, I didn't have any coach. I wasn't fooling anybody. I was just testing things. Okay? So that's one thing mentorship can do for you. You have somebody who can guide you practically and help you to become profitable. Okay? Now, there are four major emotions that make people lose money in Forex. Four major emotions. Okay? There are more than four. Please take the call outside. So there are four major emotions that make people lose money in Forex. In fact, there are more than four, but these are the four major ones. Number one, greed. Most people, because of the way the Forex market, the Forex market is one industry that as you are progressing, is teaching you some lessons. It's a Forex market that somebody said that if you're not born again, when you come into Forex market, you'll be born again. It has a way of passing you through series of lessons that will teach you how to be a better human being. Forex market is one of the highest industry that can show you how greedy you are. As you're seated there, you think you're not greedy. You're a very nice person. It's in Forex that you know that you are a very greedy person. Because on a normal day, if let's say you're selling shirts, if you buy a shirt, you can buy a shirt, let's say 10,000, and you want to sell it for 12,000, you are okay with $2,000, 2,000 naira profit. You are very okay. You don't mind. It's not too, but it's in Forex because you know that you can buy for 10,000 and sell it for 50,000. You totally for your sense of modesty. Your sense of modesty goes through the roof because your eye will now open. Why would I take only 2,000 when I can leave it to get to 50,000? So greed is a very, very key thing that kills people in the Forex industry, and it's something worth avoiding. Okay? I'm trying to check the chat we're having on the account. Okay, good. So now that one is hope. Hope in the Forex industry, welcome. Hope is not a strategy. Inshallah is not a strategy. Ego B is not by his grace is not a strategy in Forex. I have entered a trade that was going, and God, before God and man, that was the only money I had in this life. I prayed, I fasted on top, I still lost the money. Hope is not a strategy in the Forex market. If your strategy is wrong, you can't do anything about it. Most times when people do analysis, perform analysis, they somehow at the back of their mind just hope that it will work. I started my trading journey with binary options. How many of you know binary options? Not binary trading, binary options, options trading, not synthetic, not volatility. The one of call and put. Under 5 minutes, 1 minute, you either make profit. If it goes up, you make, or if it goes down. Yes. Exactly. So that particular trading options market was when I knew that I was a very greedy person, highly greedy, because of the ease that you can actually eat. You're just sitting in your room, crossing your leg, just press one button, and money will enter. You find out that you're very, very greedy. Fear is another one that kills a lot of people. A lot of people, like I already mentioned, they are more defenders than attackers. They are fear of anything. There was one guy that came around, wanted me to teach him even before we started this academy. The guy will place a trade. Before the trade close, he will call you 5 times. It's going up now, it's going up now. Is it going to continue going up? I say, just be watching it. You will say, okay, no problem. You end the call. He will call again. It's going down now. What do we do? God. So I just told him, Oga, withdraw your money, go and do something else, please. Do something else with your life. Some people are too fearful. They don't want to lose anything. Now, FOMO, fear of missing out. Some people, they don't want to miss anything. Any opportunity, they don't want to miss. If it's going up, they want to follow the trend when it's going up. If it's coming down, they want to follow it coming down. But the truth is, in life, you miss opportunities, and there's nothing wrong with missing opportunities. There was one time they were interviewing Warren Buffett because, according to the story, either Warren Buffett or Bill Gates, one of them, I don't know, I can't remember, but I think it's Warren. So they asked him, because when Coca-Cola started, he was one of the people that they came, asked him to invest, something like that. And he failed to invest, either in Coca-Cola or Apple, one of them. I can't remember, one of them, but he failed to invest. And the company now became a $1 billion company making money. So they asked him after many years, asked him, how do you feel after missing that kind of opportunity that would have added a lot of zeros to your money? He said, this is a simple opportunity. You miss it every day. But the thing is, you don't keep missing those opportunities repeatedly. So there's nothing wrong with missing opportunities. That's what I'm saying. So most people, when they have the fear of missing out, they want to take anything, anywhere they see signal. They are on 12 Telegram groups. They collect signal here, collect signal here, collect signal here, collect signal. And they are not making anything. So the fear of missing out is something that destroys a lot of traders. Another one is impatience. Impatience. You don't wait for your strategy to play out. You don't wait for the setup to be complete. Once you see that he's putting head as if he wants to go down, you quickly just enter sell so that you don't miss that one peep. That one peep, you don't want to miss it. You want to enter to that. Exactly. Those are silly mistakes that make people lose money. Okay, so learning how to keep your emotions under control while trading is the game changer. Many traders still suffer losses of capital in their trading account due to bad trading psychology. Now, strategy development. Now, strategy. I told you people yesterday that no matter the strategy I teach you, we teach 3 at the academy, but I'll be teaching 1 today for free. No matter the strategy I teach you, at the end of the day, you will have to personalize it. It has to become personal to you. You have to find a way to make that strategy favor you, welcome, you, your personality, and your style of trading, and your time. If you're somebody who works a 9 to 5, you might need to work on the strategy, practice it on currency pairs that are volatile during your own time of trading. That is the only way that the strategy can make money for you. It needs to be personal for you. It needs to be personalized for you. Most times when people, in fact, this is a mistake I did too. I'll just follow this person's strategy and test it. 1 month, it doesn't work. I'll dump it. Go on YouTube again. Search what is the best strategy for scalping. You will test. After 2 months, it feels like that one is not working. You go again. What is the best strategy for swinging? Before you do it, 1 year has passed. You have lost all your money. But you continue again. You go again next year. Looking for strategy that works. The truth is, I tell people making money in Forex is very easy. It's just that people don't like putting in the hard work required. What makes a good, successful trader is not even the strategy. It is your confidence in the strategy. Because a strategy that you don't have confidence in, the few times it will have losses, you will feel like it's not working again. So the main thing is not even the strategy, it's the confidence you have in that strategy. Because no matter how good a strategy is, there will be a time where it will not work. And you cannot do anything about it. Every strategy has a win rate. When you hear people tell you my strategy wins 90% of the time, it's a lie. It's a lie. A strategy that wins 90% of the time is a strategy that will give you a lesser win rate. Maybe a strategy you're risking 2 to make 1. It can make you 90%. Or it can be 90% win rate. But it's a strategy that can get at least 1, risking 1 to make 2. Highest that a strategy is excellent, 80%. This is Forex. This is not anybody's property. Anybody that tells you this is a 90% win rate strategy, just know that that one time it will lose. Might blow the account. That one time it will lose. That 10% time it will lose. Will blow your account. So a good strategy, 60, 65, 70, excellent. But you need to backtest it enough for you to actually trust it. Because the few times you might lose, you might give up on it. There was a time I shared, I think this happened last 2 months. I had 7 straight losses. In fact, after that experience, I did a YouTube video. It's still on my channel. How to recover from losing streaks or something. Something like that. That's the title of the video. 7 straight losses. That's the highest I've had. 7. But do you know what followed? 6 straight wins. And with 4 wins, I've covered all the losses. The remaining 2 wins were now profit for me. So if you don't have a confidence in the strategy you're using, even a strategy that makes you money, you might lose money on it. If I didn't have confidence in my strategy, after that 7 losses, I would have just this my strategy, like it's not working again, and look for something else. But I took 6 more trades with that same strategy, and the 6 of them were all wins. Now, if your strategy is 100% win rate, is a, let's say, 60% win rate, 60%. How many of you did probability in school? You did probabilities, I mean, probabilities and sampling, something like that. If we take 60 trades and pick randomly, there's every possibility, and let's say some are plus, which is wins, some are negative, which are losses. Randomly, if you sample 100 of these things, the plus will be 60, the minus will be 40. If you pick randomly, at the end of the day, you might have a time during your picking where you can pick negative 4 times straight. You might have a time where you pick positive 10 times straight. But it's the same strategy. So success in forex trading is a game of numbers. I tell people there's no single trade that can change your life. Say this one now, this is the one that will change your life, and you put all your money inside. What if that one is the one that will lose? I teach people how to double account. It's very easy. But there's a way I do my own. Because sometimes, every now and then, you just load a small account and just want to double it. I never make the mistake of taking one single trade, risking everything on one trade. Never. If you want to double an account, get your account, divide it into 4. 25%. And take only trades that have the potential of giving you 1:2 minimum. If you take 10 trades using the strategy I'll teach you, your account will double. If it's not double, at least 50%. It's not that hard. We have to have confidence in the strategy. That's what I'm saying. Okay? So every strategy has 3 components: entry conditions, management conditions, and exit conditions. Okay? You know what to see before you enter the trade, what you see, and to know when to manage the trade. Because sometimes you take a trade, you know that you need some modification. You need to either reduce the lot size, modify the stop loss, or break even, whatever it is. Okay? Now, also exit conditions. Now, introduction to indicators. Indicators are tools that are used, are mathematical tools that helps you to analyze a specific information in the market and or suggest a trading decisions. There are literally millions of indicators in this world. It is human beings like you and I that come up with indicators. It is human beings that develop indicators. You understand? There's really nothing that special about it. Are you with me? So there are millions of them, and it's human beings like you and I that are always coming up with them. Okay? So indicators can be moving averages, they can be Fibonacci, they can be alligator tools, different tools. And there's one mistake that people do. There's this thing, this lie that indicators don't work. Was it yesterday that I told you I thought about that thing? Or on Monday during the free mentorship class, exactly. Indicators work. Let nobody tell you otherwise. Okay? But indicators are used for confirmation, not for analysis. You use it to confirm what your analysis has said. You understand? The guy that taught my elder brother how to trade, according to the story, according to him, he used to go to a particular bank. He used to go to a particular bank and to visit somebody. So anytime he comes, he'll just be in front of his laptop, just pressing, trying to analyze charts and all of that. So there was this particular guy that normally comes out there every time he sees him doing that. And the guy will always ask him, how far? This your chart something. Does it even work? So the guy will say, that is working. He's trying his best. So like two different occasions, he'll be in the bank trading. The guy will come out, ask him, "This thing you're always spending your time, is it really working for you?" The guy will say, "It's trying." But one particular day, on a fateful day, he was normal thing. He was waiting for his friend in the bank, pressing his laptop. So the guy came again and told him that he wants to see him. And he should come to his house. He gave him an address. Come and meet me on Saturday. So the guy came and he now told him that he is the one trading for this bank, and that the reason why he's even telling him now is because he's leaving. And after he has left, his contacts, he can't reach him again. All the contacts you have about him will stop working. Anything you know about him will stop working. He changes all his details and moves to another location. That's why he's telling him. He now told him that he is part of a company, kind of a secret training company, where they train traders and they deploy them to institutions to trade for them. So it's like a secret service. So banks can call them and say, please, we need somebody to help us at least make 12%, 10% this month. And they send somebody from their company to the bank, sign a 6 month contract, the person trades for them 6 months and goes home, changes location. Yeah, good afternoon. Welcome, sir. Why not? Where will you sit now? Okay, come sit here. Sit there, so please. So the guy told him that he's the one trading for that bank and he will be going. So that once he's gone, all his contact, everything about him will not reach him again. And the funny thing is, the strategy he taught him was simply an indicator-based strategy. That was the strategy he was using to trade for a bank. So anybody that tells you indicators don't work, all those things are lies. It's a very simple strategy. In fact, he taught me the strategy, but because sometimes it's because you know too much. That's why some things don't work for you. Because the strategy did not just support my knowledge of support and resistance. I just couldn't continue with it. But the person I was trading, attaching his office to trade, the guy was using the strategy, and that's the strategy he has been trading all through his trading career. Full-time trader. The same thing, one currency, GBP USD. And you know the indicator? Alligator indicator. So anybody that tells you that indicators don't work, that's not true. That's not true at all. Indicators work and they work very well. Okay. So time to cash out. Okay. So this is we have three strategies that we teach. Jackpot strategy. This is one strategy that like can make you really good money. We teach, but this one is for only those. Okay, go ahead. Go ahead.
I've not heard anybody that said indicators don't work, but they usually use the word indicators lags.
Indicator lags. Okay. Let me explain what it means that an indicator is lagging. When they say an indicator is lagging, it means that, for instance, now let me see whether I can open a chart. Now, if I put a moving average here, this moving average can only cause, of course, this is a 4-hour time frame, and this is a 20 period moving average, this blue line here. For every single move this moving average makes, this candle must have to close first. You understand? If this red candle suddenly turns blue, you understand? A blue candle now, this moving average now will only take the next step if this one has fully closed. You understand? So what they mean by is lagging is that it is following price. It's not predictive of price. It's giving you analysis of what has happened. So it has to happen first before the indicator will now give you a value for it. You understand it now? Yes, that's what it means by lagging. Okay? Now let's move. So the second strategy, which is the one I'll be teaching you, is marksman strategy. It has a win rate of 65%. Another one we teach is martingale strategy, which is very excellent. Just that most people don't understand how it works, but it's really an amazing strategy. So let's go ahead. We're going to the charts now. We're about to get practical now. We're about to get practical. So for those of you that missed the classes yesterday, you might just have to catch up on YouTube before the video will be put down, because we'll be taking down the video by maybe Monday. So you might just have to catch up on YouTube as soon as possible so that I don't miss out. Okay? Now, I taught you support and resistance yesterday, and I told you guys that support and resistance is simply a theory. Okay? Just like every other theory, it has the times where the theory holds true, and there are times where the theory doesn't hold true. You understand? But however, it is a real, very flat, theory. Okay, it holds. Now, the marksman strategy needs two. It needs basically three things. Three things. You can write it down if you want to write it down. It needs basically three things. Number one is market structure. When they say market structure, let me be sure that you guys understand what I mean by market structure. You know what market structure is? Any question on anybody that doesn't know what I mean by market when I say market structure? Anybody that does not understand what I mean by market structure? Okay, that means we're good to go back. You do understand it? Okay. So market structure is simply what is it looking like? What is the trend of the market? What is the candlestick pattern? What is the chart pattern? That's market structure. Okay? So market structure, what you are looking for is to identify higher highs and higher lows. Number two, what you also need is two time frames. Two time frames. You need a higher time frame for analysis and a lower time frame for execution. A higher time frame for analysis, a lower time frame for execution. Okay? Now, it depends on you, the one you want to use. You can use a daily time frame and a 4 hours. The daily time frame being your higher time frame and 4 hours being your execution time frame. You can use 4-hour time frame and 1 hour time frame. 4-hour time frame being your analysis time frame, 1 hour execution. You can use 1 hour and which one? 15 minutes. Or you can use 5 minutes and 1 minute. Okay, but typically I advise do 1 minute and 15 minutes, especially if you are a day trader. Especially if you're a day trader, 1 hour and 15 minutes. So the examples I'll be taking with you here are examples we use 15 minutes and 1 hour. Okay. Now, number two thing you need is two moving averages. Two moving averages. And the one we typically would advise you, to use for the moving averages are the 50 moving average, 50 SMA, and 20 SMA. Are we together? 50 moving average and 20 moving average. These are the three things you will need. Now, let me explain the theory before we now go into the practical aspect of this now. I already established for you guys, I'll draw two time frames now. This is H1 time frame. This is M15 time frame. Now, if this market wants to go up, if this market wants to go up on 1 hour time frame, it doesn't go like this. It doesn't just go straight like this. It will go like this. This is what a trend looks like typically, right? Now, what you're looking for first of all is the market structure. You start your analysis on a 1 hour time, which is the higher time frame. Start your analysis on a higher time frame, 1 hour or 4 hours if you want to execute on 1 hour. Okay. Now, 1 hour time frame, what you're looking for is a typical either a resistance broken becoming a support or a support becoming a resistance. What you're looking for is typically something like this. When the market, maybe for an uptrend, you're looking for a situation where the market goes up, then this is resistance, breaks this resistance and retraces back to it. You are now hoping that this resistance here will become a support here for you to move this market by it going up. This is easy to understand, right? Easy to understand. Any questions so far? Any questions so far? Fantastic. Okay, go ahead.
I really want to understand what it means to that resistance.
Okay.
Is it when the candle is not, is it when the candle is no longer touching the line?
No. When a candle has fully broken, when a candle has fully broken a resistance, is when the candle or the market structure has properly gone above it significantly and has closed above it. Now, let me give you an example now. This right here is a typical situation of support becoming resistance. This point is this is the support. At this point where this red candle has broken below it and closed below it, this support has been broken. You get it now? So that's what I mean when the support is being broken and the market now retraces it back to it. This is, you're now hoping that this support here will become a resistance here.
So I'm saying if this red candle
Okay.
has broken this support,
Okay.
then this blue candle can follow, which is that support. Is that also called test?
That's this one now.
No, not that one.
Which one? This one.
The one following it. Not that one.
This one.
Not that one.
This one.
Not that one. Yes.
No, this is not retest now. This is not retest. Retest has to. This is what are you retesting? Okay.
Saying, if this blue candle
Okay.
touches that support line, the line.
This one.
Is it also retest?
Yes, it's retest. Yes, it's called a retest. It's called a retest. It's retesting this zone to know whether it has become a resistance. It can also break above it. That means that this support is still valid. It's still a support. It has not become resistance. It is after the retest and maybe after this red candle, you can now say, okay, there's still this support now is becoming resistance. You understand it now? Any questions? Any more? Please, if you have questions online or offline, is that my phone? Okay, please end every call because I'm using the network. So, any questions so far? Okay, I was blocking you people. Okay. Now, this is a support level, right? This is a support level. If we connect these two places together, this is valid support, right? Then the market now broke this support level. At this point, it has broken the support level. This support here has been broken. As for if the market, like for instance, now let me do something. Good. Oh, so at this point, this is the support. This is the support. At this point where this candle came here and touched here, this support is still valid. It has not been broken. It is until this candle has come, broken. Okay, can you still see now? Good. This this candle that touched and went back, this support is still valid. It is until a candle has broken and closed below it, you can now say that this support has been broken. Retest is when the market now goes up to retest to check this level again, whether this support will become a resistance or whether the market will keep going up. Which in this case, what happens? The market clearly comes to the support and the support now became a resistance. Why is it? Okay. Do you understand now? Are we good to go now? Okay. So, so if you see something like for a buy signal, for you to see a signal to buy, the market has to give you something like this. And this is where you now start looking for an entry. Now, the truth is this. This thing you're seeing like this, if this is on a 1 hour time frame, this thing you're seeing like this one line like this, on a 15 minutes time frame, it won't look straight like this. On a 15 minutes time frame, this thing you're seeing here now, like this and like this, will probably look like this. Do you understand? Because on a 15 minutes, there are more candles. Now, the idea behind the strategy is the fact that if you put a moving average at this point on a 15 minutes time frame, these places you're seeing here would be on a moving average, either the 20 or the 50. If it is a strong trend, it will be following the 20. If it's a weaker trend, it will be following the 50. It will be bouncing on the 50 or on the 20. So what you're looking out for is, let's now get practical. For a buy signal, you're looking for a market to go up, come down, break a resistance, then retrace back to it. At this point where it is back to this place, you now jump to a 15 minutes time frame and look for entries. Is this simple enough before we go practical now? Simple enough. Okay. Now, for example, let's just talk. Let's do a bit talk. Let me put a 15 minutes, 50 moving average on this. Why is this guy not going out now? It's like somebody is so. As in, mm. Okay, good. So this this thicker line is 50 moving average. This smaller one is 20 moving average. Okay. Now I will scroll back now to show you many instances where, let's go to 15 minutes time frame. You will notice that anytime the market is trending very well, either downwards or upwards, you notice that it's always bouncing either off from the 50 or from the 20. So scroll back and I'll give you several situations like that. See this place. Market came here, went down. See this place. The market came, bounced off the 50. See these places. If we start this analysis on a 4 hours and jump down and capture a move from here to here, on a 15 minutes, this is what it will look like. So there are opportunities to get multiple entries. Are we ready now? Alpha, Oga Joe. Okay, so which currency pair do you want us to analyze? Because most time when we do this, some people will feel like we've premeditated something. Eh? Uh-uh. NZD, somebody say NZD USD, Euro USD. What do you want us to do? Euro USD. So we'll use Euro USD. Now, let's start our analysis from 4 hours. I will scroll back and then we'll do a replay from there. Let me cancel this. Okay. Okay. Now remember that what we are looking for is simple. We're looking for something like this for an uptrend, or we're looking for something like this for a downtrend. That's what we're looking for, right? That's what we're looking for. So let's go forward. Let's see. This is how where you start your analysis. You're starting your analysis. Oh, this is 4 hours. Sorry. Let's move to 1 hour. Good. So let's go. Let's see whether we'll get a situation like that. Okay. This is already looking good now. See what we have here. See what we have here. And the market is back here to this point. Is everybody seeing what I just drew here? So at this point now, after this blue candle has closed, is when you move to a 15 minutes time frame. You have done your analysis on 1 hour. You are now going to 15 minutes to look for entries. And your entries will be based on candlestick patterns. There are many candlestick patterns you can use, but I typically advise double top or double bottom and engulfing patterns. Those are the two candlestick patterns I advise. Is there anybody that does not know what is a double top or a double bottom? Okay. Okay. Very simple. There's nothing complicated about it. Double top situation, for instance, is this thing you're seeing here. This market wants to go. Okay. Now look now. This market wanted to go up. After this candle, it reversed down. Okay? And tried to go up again. And this after this candle, it went down again. This is a double top. That simple. If it appears on the opposite side, it's a double bottom. Good to go. Fantastic. So let's scale down now to a 15 minutes time frame and let us look for entries. Good. So this is what we have on a 15 minutes time frame. We can clearly see already that this market has been bouncing off the 50 moving average. Remember what I told you. What we were seeing on 4 hours was just straight line. But on 15 minutes, we are seeing that it has been bouncing. So it's back here again. So what are we looking for? We are looking for a candlestick pattern, either an engulfing or a uh, or a double top that will indicate to us that this thing will still bounce from here. So let's see, let's go forward and see whether we have that situation. What are you saying? Engulfing. So are we selling? Eh? Why not yet? There's nothing to wait for. This is a good entry. There's nothing to wait for. This is already a good entry. So if you put your stop, your take profits here, I use ATR, but I will explain how to use ATR. That's a lot of English now. Put your take profits here. You can actually move it to, because normally I use the execution time frame to put my stop loss, but I use the analysis time frame to put my take profit. Because of course you want to be making more than you're losing. Is that not correct? You want to give yourself the opportunity to lose one, risk one to make two at least. So if you're risking $100 in this, at least you want to make $200. Okay, but however, it depends on the condition. For this trade, this typically does not look like a trade that can give you 1:2, but in this case, it can give us 1:1.3. We're risking 1 to make 1.3. That means if we're risking $100 on this trade, we're looking to make $130. So let's see whether it works. Now, please be reminded that this is a 65% win rate. So this one might not work. But we know that if we do this 10 times, 6.5 times, sometimes 7 times out of 10, one will work. So let's see whether this works. Okay, stop loss. This one has stopped us out. So this is where you go back, look for another entry. Good. Some people already feeling bad. Some people are already feeling bad. No. See, let me tell you something. Losing a trade is as much part of trading as also winning. You have losing trades, you have winning trades. In fact, I'm even happy we started with the losing trade. So that when you do it practical and you lose the first one, you know that it's not a matter of that one you lost. This is a game of numbers. I already told you that. You understand? So we'll take maybe 3 or 4 more extra trades. So let's go back. So please, nobody should feel bad. Okay? So let's go back to a 4-hour time frame. Let's see whether our entry is still valid. Okay, it's not looking good anymore. So let's, okay, sorry, 1 hour. This is still not bad. It's not even looking bad. It's still good. It's still good enough, right? It's still good enough. So let's go back to 15 minutes time frame. Let's see whether we get another entry. Okay? 15 minutes. Okay, it's already above the moving average. No need. Because it has to be below. Because we are looking to sell. But the price is already above this moving average. This is not good. It's not good. If it was a buy signal, then we'll be looking for a bounce from here. But it's already above. So this is not good at all. So let's go back to 1 hour time frame and scout for entries. Okay, we missed a trade here, but how many of you saw the trade we missed? We missed a trade there. That time it went up. Okay, this is not bad. Although I'm skeptical because the sell has been very aggressive. So we have this, and the market is back to this place. This is from here, here. Market is back here. So we put a line here. This is looking like a good place to go and look for entries. Okay? So we are going to a 15 minutes time frame. Let's see whether we'll get a good entry. Okay, nothing good here already. Nothing good here. The market, the price is above the moving average. So this is not good. Not good enough. So let's keep going. You see? This is looking good to me, but not my ideal kind of entry. This is where the support is. It's back here. This is not a bad place to go and look for. Which signal are we looking for here now? Which signal are we looking for here? Buy or sell? We're looking for anybody saying sell. We're looking for buy because we have clearly had this is series of higher highs and lower lows. Okay, so this is where we are. We go down to a lower time frame and look for entries. Not good. We need this price to be above this. If it's below it, we're not interested. Okay, so no setup for us. We move again. Oh, this is GBP USD. I thought it was Euro USD we've been analyzing. No, this is GBP USD. Okay, this looks fair enough. 1, 2, 3. We are back here. Abby? Abby? So what are we looking for? Which opportunity are we looking for here? Bye. Excellent. So let's scale down to a 15 minutes time frame. This is still not good, but let's go forward and see whether we can break and close above this. If this market keeps going down, it's invalidated. But if we can break and close above this moving average, then it's good enough. Okay. Okay, good. Let me see what the 1 hour looks like. Okay, our entry is still good. Our entry is, we are still at this support zone here. So it's still a good place to go buy on 15 minutes time frame. So what we are hoping for now is that this market on its way up to this zone, probably, let me find a zone on 1 hour time frame so we can mark the zone. This is where we are hoping that this market will get to. This is where we are hoping that this market will get to. But on its way to this place, on a 15 minutes time frame, it will be going like this. And we are hoping that this bounce will be happening on 20 moving average or 50 moving average. Just reiterating that, okay? So let's go now, 15 minutes, and enter our trade. So we're entering the trade here. Put our stop loss somewhere here, somewhere below this last support. I usually use ATR for setting this, and then I'll take profit. Let's do 1 is to 1.5. Although our ultimate target is here, but let's see how far this would go. Okay, so we're on the trade now. So let's see what happens. Okay, we've not been able to get 1 is to 1 on this trade. Okay. So we're on 1:1 now. We are on 1:1.4. But let's be patient and let's get 1:1.5. Yeah. So this is a typical winning trade.
What was my heart?
Okay. Okay, question. So typically, somebody is asking, please, I want to ask that we can use indicators with SMC. Yes, you can. But SMC is more of a very candlestick based strategy than it is indicators. So yes, you can use indicators, but SMC is a very highly prioritized um, candlestick based approach trading. Okay, so we have won this trade. We made 1:1.5. So if we are risking $100 for the two trades, are we on profit now with the two trades we've taken? How much? How much profit are we now? Are we on profit first of all?
Yes.
So how much profit are we if we were risking $50? Sorry, $100 per trade.
$50.
We're on $50 profit. Now let's take maybe 2 or 3 more trades. Okay. Any confusion at this point? Any confusion, any question at this point? Is it making sense? Go ahead.
This we being a profit or loss. The first win ratio here is 1:1.5, right?
The first one we are no, the first one we are trying to get 1:1.3
Lost now
and we lost it. That means we lost $100.
$100. Then here now, okay, here, okay.
1:1.5. At every point in your trading, you must not be risking more than you're willing to make. If you're risking $100, make sure that the target is either 150 or at least $200. I would have said let's do one is in fact let's move this to 1:2. Let's see whether it would have given us 1:2 because at the end of the day, this is where our ultimate target is. This is where we are hoping that this market will get to, which is like 1:2.7. So let's see whether this market would actually get to this our main target here. So let's keep going.
Come and collect all our
Collect the one you made. Okay, unfortunately, I don't think that's happening. Okay.
see after
So,
you I want $50
so, so, so what is it would have just given us would have been just 1:1.5. Okay, so let's look for another entry. Let's look for another entry.
What's up?
Yeah.
At this 1 hour now, just you know,
Okay.
I think that already another resistance and then follow the rest of it. Make that trade.
Where?
And then,
Here.
yes.
Yes. Yes.
So that our 1:1.1:2 is we risking more because there's already another resistance. That
Yes.
our other resistance
It's
is
too far.
far now.
Yes. Yes. That's a good approach. So look at what we have here now. If we want to start our support here, we have this, and the market is back here. So which opportunity are we looking for here? Buy or sell?
So
Sell. Fantastic. So let's go down to a lower time frame and see whether we get a sell opportunity. It's above the moving average, so no show. So let's go back. Let's keep going. This is not looking bad, but let's not risk it. Ah, we missed a trade here. We missed a trade here. We missed a trade here. But it's all good. Let's keep going. This market is just ranging. The reason why many people don't make money in Forex is because the patient to wait for a good setup to show is not everybody that has that patience. It's not everybody that has that patience. So, what are we doing now? Which opportunity are we looking for here? Is above the moving average, so no show. Okay, this is good. Abby, what are we looking for? Sell. Unfortunately, is above, so no show for us here. Okay, our signal setup is still looking fine, but let's proceed further. Let's see. If this closes below this moving these two moving averages, then we might look for something. Let's see how it goes. Okay, no show for us. Let's go back to 1 hour. Okay, our setup is still fine because we are still on this support here. Our setup is still good because we are still on this support here. But my fear now is that it has broken above it before. That's my only fear. But let's see how it goes though. If we get a good significant bounce, are we selling or are we not selling? Are we selling or are we not selling? Are we buying or selling? Why are we buying? No, no, no. Are we buying or are we selling? Okay, let me clarify something here. On the higher time frame, which in this case is 1 hour time frame, that is where you're only looking for market structure. On the execution time frame, which is the 15 minutes time frame, what you're looking for is candlestick and moving average. You understand? What you're looking for is for a bounce off the moving average. That's what you're looking for. So in this case, we are selling. If we put our stop loss somewhere here, somewhere above this high, Then look for take profit with the 1 hour time frame. Remember, we are take profits, we use the higher time frame. So this trade has the potential of giving us 1:3, but let's not risk it. Let's just do 1:2. Let's see whether we can get a 1:2 on this trade. Let's extend. 1:2. Okay. So are we ready? So let's go. Let's see how this trade actually plays out. There's some trade that will test your trading psychology. So at this point, we have 1:1, but we're looking for 1:2. So if we are looking for 1:1 on this trade, we have made profit, but we are not closing. We'll hold till we get 1:2. But typically, if this was me taking this trade, you will move your stop loss to break even. You understand? So even if it reverses, you don't lose your money, right? So let's go. Let's see whether we get what we are looking for. Fantastic. Please clap. It's worth clapping. It's worth clapping. So, how much profit are we on now? We can't be 200. We're on $250 profit. Should we take more trades? So let's take 1 or 2 more trades, okay? Okay, you have closed for today. Okay, so let's go. See, if we had put that 1:3, we would have gotten 1:3, sir. If because this is where we wanted to target. Say it's a lie. You not see the market. That's it's a live market. This is a live market now. Now, no, no, this is a back test. We are testing. You understand? We are testing. But if we are taking the trades as maybe when this thing was happening, we would have been making money now. Okay, so let's keep going. What do you think? What do you think about here? Because it looks like this. So we're going to a 15 minutes time frame. Let's go and look for entries. Okay. This is not comfortable now. The only thing that will make me to enter this trade if this candle closes below this moving average, then I can hope that this bounce that happened here will also happen here. But if that doesn't happen, we move. Okay. Not good enough. Still not good enough. Not good enough. We need a red candle closing below that moving average before we take any action. So this is good. This is good. This is good. So let's cross check and look at the 1 hour to be sure that our structure is still in place. Okay, it's still good. We still have lower lows and lower highs. So what are we doing? Are we buying? Are we selling? We are selling. Although this trade doesn't have potential of giving us 1:2, what we can only take out from this trade maybe 1:1 or 1:1.5, because this is where your targets will be. So this is like 1 is to 1.3. Let's go on the 1 hour to confirm. Okay. So what the only potential this trade has is just 1 is to 1.3, because this is where we want to exit. So let's see whether that happens. Is your heart still beating? You have closed already. Okay. So this one is stop loss. Okay. But are we still on profit?
Yes.
How much profit?
150.
We're still on $150. Okay. And we've taken 4 trades. We lost 2. We won 2. So you see what I was telling you about risk to reward. If you have a good risk to reward, even if your win rate is just 40% of the time, you'll still be on profit. But the problem is that people don't have patience to wait to hit 1 is to 2. And that's the is an African factor. People believe the negative more than if the trade is going to hit your stop loss, you will be patient. You'll be hoping. No, 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 no. Let's be hoping. Let's be hoping it will not hit. But if it's going to your take profit, something inside your mind is telling you this thing will not reach. Oh, close it now. Oh. And before you know it, you close out a trade that would have given you 1 is to 2. So let's take just one more trade. Whether that one gives us profit or not, that will be all for today. Okay, this is looking fine. We have this, this, and this here. So let's go down to a 15 minutes time frame and look for entries. Now, the only reason why I will consider entering this trade is if we see a red candle close below this. If it doesn't close below this 50 moving average, we are not interested because it has bounced here, bounced here. So we need to be sure that it can also bounce here. Okay? So let's go forward. Ah, this is not convincing. We want it to break below. It did not break below, it broke on top of it. We want it to break below this 50 moving average to confirm that we are good to go. Okay, this is a bit convincing now. At least it has closed below it. So let's go on a sell. So this trade can only give us 1 is to 1.3. 1 is to 1.3. Let me just move this stop loss a bit so that we can at least get 1 is to 1.5. Okay. So this trade is a 1 is to 1.5 trade. So whether we close it on profit or not, we are done for the day. This is a trade that this is the kind of trade that will drive you nuts. That kind of trader will stop you out, then now go and give you profit. So this was a stop loss trade. But are we still on profit? Yes or no? I would have loved to take more trades, but I'm exhausted, really exhausted. Eh? So this is something you can test for yourself at home. It's very simple. If you don't have confidence in the strategy, you will not use it. That's how it works. If you don't have a confidence in the strategy, you will not use it. If we do this up to 10 times, you find out that 6 out of the 10 would hit take profit. Okay? So we admonish you, go back home, test this for yourself. So let's quickly finish through the curriculum. Any questions? Any questions? Let me be sure that. Okay.
Best time frame to do that now is 1 hour and 15 minutes.
It's actually 4 hours and 1 hour. Yes. It's actually 4 hours and 1 hour, but it will be harder to find. If you're a day trader, it will be harder to find entries. Because before you wait for 4 hours to close, there are 6 4-hour candles in a whole day. And it's possible it might not give you an entry. But if you're using 1 hour and 15 minutes, you will find more entries. But if you find entries on 4 hours and 1 hour, is more accurate than 1 hour and 15 minutes. You understand? But as a day trader, you need to take trades, right? They are just bringing the light. You can imagine this. So, developing a trader's edge. This is model 9 now. Edge in trading. Trading edge is simply it simply comes by experience. After you found a strategy, back tested it enough to trust it, there comes a time in the market where, or in your trading journey, where the market is more like second nature. It becomes more like it just becomes normal to you, like drinking water. That's when they say somebody has developed a trading edge. You can look at a chart and by reason of experience, you can tell that this is what will likely happen. But it comes by practice and it comes by experience. Okay, there are two major ways traders can develop their edge, and that is number one, by experience. As you know, experience, they say, is the greatest teacher. This also applies to Forex. Now, back testing. I told you guys, back testing is the only thing that can give you confidence in any strategy at all. If you don't know how to backtest your strategy, you might have a good strategy and still be losing money with it because you don't trust it. So imagine, okay, after we took that first loss and we decided not to take another trade. You understand? And we decided maybe change the strategy, use something else. Would have not made money for the day. So confidence in the strategy what makes you to keep using the strategy no matter the outcome. I tell people, it is not the result of a strategy that makes you profitable. It is when you repeat it, repeated result of that strategy. So one trade alone is not enough to determine whether you're a good trader or not. It's the ability to stick to that particular strategy, keep repeating the same thing. You understand? For instance, now, if let's say, what's the name of that new club that C Ronaldo is playing now? Al Nassr. Somebody said it's Walai Talai FC. So if Al Nassr is playing with Chelsea and during the match, they are all looking at the scoreboard, focused on the scoreboard. Is anybody going to win? In fact, they will not be playing because if your eyes on the scoreboard, how will you now focus on the ball? So it is what they are doing on the field that determines what is happening on the scoreboard. So in trading, your focus is to find your setup and trade your setup. The outcome of the trading now depends on how much you repeat that same strategy. Are we clear now? Let me check if there are questions online. Okay. Somebody is asking which entry pattern or candlestick is better. There is none better, but we suggest double top or double bottom or engulfing patterns. Okay. Someone is asking what type of indicators are you using and how to set it. We're using moving averages, 20 moving average and 50 moving average. Somebody is saying, so for the moving averages, the prices must be below them. Yes, for a sell, the price must be below, and for a buy, the price must be above. This is on 24. Please put it on 16. It's on 24. Change the mode to cool. So let's do a review on, okay, for the moving averages, the price must be for the entry. Yes, for sell, the price must be below the moving averages. And for a buy, the price must be above for you to enter in for a buy. Okay? So let's do a review on trading psychology. Uh, okay, a trader must bring his mind and body to the point where his decisions are totally uninfluenced by his emotions and feelings. When this happens, the trader is said to be in a zone. You need to know that not trading is also trading. Knowing when not to trade is as good as knowing when to trade. Because a lot of what happened? Because a lot of traders overtrade. They are always looking for entries, always looking for when to trade, even when they should not be trading. There are some times when you are just not in a good frame of mind. Stay away from the market. And being under pressure is the greatest predisposition to taking rubbish trades. Let me give you a premium advice if you want to start trading and start making money from trading. Before you start trading, have a source of passive income first. This is what people don't tell you. If you want to start trading full time, have another source of passive income that can at least give you food if the trading doesn't go well for that day. Because there are days where you will not make profit. And in a bid to go and recover your money, you will lose more. The Forex market is not a place where you do revenge. If you dare revenge in Forex, if you dare revenge, just forget your money. Forex market is not a place to revenge anything. If the market takes your money, just allow it to go with the money. Jeje, don't stress it. Come back the next day and continue. Because in a bid to recover your money, you've already lost comportment. You've already lost you're already under pressure. And pressure predisposes you to rubbish trades. You can just see a setup that is not even ripe and just jump in. You can see something. By the time the market is here, you just jump inside. You understand? So you should at all times make sure that your trading is not influenced by your emotions or your feelings. Okay? A good trader must know and understand sometimes that knowing when to avoid entering the trading position in the market is also trading. I've mentioned that already. So getting set to trade, what do you need? Now you must set out time for trading. This is something I didn't know was a real thing until after many many years of trading myself. I found out I found out that every good trader out there, or every good trader out there, has a trading time. You must have a time that is because this is a professional work. You understand? A good trader is called a professional trader. So you must have a time for your trading. You don't just jump today you're trading by 9 o'clock. Tomorrow you're trading by 11. Tomorrow you're trading by 12 midnight. Next you're trading by 3. The fact that the market trades 24 hours doesn't mean that you should trade 24 hours. Because another thing is that trading can really be addictive. You don't know? Trading can be very addictive. That thrill of putting a trade and watching it is going up, is going down, it can be really addictive. When I started trading, I didn't know these things I'm telling you. Then I'll wake up by 12 midnight. First thing I look at is chart. Start looking through the chart. Sometimes you wake up and sleep will just leave your eye. You just find out that throughout that you didn't sleep again. And you are useless throughout the daytime. You understand? So you must have your time of trading. For me, any trade I don't take between 7 o'clock in the morning and 5 p.m. That's all. That's all. I don't even look at the chart once I get home. I don't look at the chart for it, unless maybe it's an account I'm managing with an EA, an expert advisor, a robot. Then I can monitor it. But if it's for to do analysis, enter trades, anything from 4 p.m., most times I don't take any trade anymore. All my students here know it. Once I'm done for that day, that's all. No matter the setup, I'm not interested. Because you're trading to be free, not to become a prisoner to trading. You understand? I want my time. So you have to have a specific time that is your trading time. Now, target. Set a realistic target. Set a realistic target. Don't do, you want to start with $100 and this month you want $100 to become $1,000. It's possible, but it's not realistic. You understand? It is possible, but it's not realistic. So set realistic goals and know when to appraise yourself. A whole bank, are you richer than bank? Gives you 4.5% for a whole year. A whole year. If you're able to make 10% every month as a trader, you are an endangered species. You are rare. 10% consistently every month. You are rare. You are an endangered species. So set realistic goals. Don't just trade. Don't just come with inshallah mindset. Withdrawal plan. This is another one that people don't know. Withdrawal. Withdrawal is important. Because that's the only way to know that you're making real money. Let me tell you what I do. Anytime I trade and I make some good money, I withdraw and buy anything I want in this life. I just make sure I finish the money because this thing has stressed me. So he has to pay for that stress. You understand? So anytime I get some good money, I buy something that makes me happy. Buy something, anything that gives me joy at that moment. Some people don't have withdrawal plan. All they do is just deposit. They're just depositing. Just donating burnt offerings to the market. No withdrawal plan. So as much as deposit plan is important, withdrawal plan is importanter. Okay? If you make money, withdraw. It gives you the motivation to keep going. Because sometimes when you look at what you have bought with this money, you'll be like, wow, okay, this thing is really working for me. It is really working for me. I can remember when I made like the first, I think it was about the first 4,000 something dollars. I withdrew half of it. This was around 2019, 2020. Withdrew, went and bought my first car there. Because I needed to tell myself that this thing is working. And guess what? The remaining balance, I blew it. But I was happy. When I looked, it was one small. How many of you know Ford Focus? That was my first car. When I look at it, I feel proud of myself. That this is a product of my sweat. You understand? It gives you the motivation to keep going when you have losses. Because there's something called losing streaks. Every trader has them every now and then. When you just be making losses, you can't even explain what's happening. It happens to the best of traders. I told you how this was last ending of around December, January period. 7 straight losses. 7 straight. I almost lost. You will do analysis, everything looks good. It will just run as if it's waiting for you. Maybe you enter the trade. It will just go and hit your stop loss. You understand? So if you don't have something that motivates you to keep going, you might just give up. That's why a lot of traders give up. So demands of professional trading. Trading is a profession, as I've told you. This is a profession. What we try to do at Trader, how many of you are Trader First? What we try to do at Trader First is to install that mindset into traders. This is a profession. Don't see it as a get rich or an escape from poverty. This is a profession. Just like every other profession, it will require time, it will require practice. You understand? It will require your time, it will require practice. So give it that approach. The good news is that it has the potential to pay more than any other profession. But just like every other profession, it requires time, it requires practice. Is that okay? So I also said here, you need a constant passive stream of income so that you not be under pressure to enter unnecessary trade. I told you guys yesterday how I became profitable. It was when I already had a job. When I was doing my internship, they were paying us 135,000 something something. That was when I wasn't trading to make money again. I was trading for fun. But I found out that my trades were making more money than it was before. But the reason behind that was because I was no longer under pressure. You understand? So before you go into trading full time, just find something else that can just at least enough for food. Trading can give you the bulk of the money, but at least let it not be. Don't put yourself under pressure. That if you don't trade, no food for that day, you will go hungry. Okay. So startup capital recommendation, we always recommend to start with at least $300 at least. You can start with $100 or you can even start with $50. But the reason we say start with 300 is because if you're risking 2%, which is what we always advise, don't risk more than 2% per trade. If you're risking 2% on $200, that's like how much is that? It should be $4, right? $4. $4. If you risk $4 out of $200, if you risk that three times, and let's say three of them goes into loss, really down of 6%. And the truth is, what people don't understand about drawdown is that it has a way of destabilizing you. When you're on a trade, you have a capital of, let's say, $1,000, and you are down 1%, 2%, 3%. It doesn't feel you are still not under pressure. But by the time it now gets to 7%, 8% drawdown, you're already under pressure. And you should at all times protect your trading emotions. So when people have drawdowns like that, it's already affecting their trading emotions. Somebody starting with $100, 2%, you're risking it on one trade, and they have three losses. That's $6 gone. You're now left with let's say $94. You might put yourself under pressure to recover that money. You understand? So trade with a capital that 2%, risking 2%, will not feel that bad. You might not feel the pressure that much to go back and start hunting for your money. Okay? Now finally, model 10. Now let's just do a full recap of all we have taught. How many of you have enjoyed this class so far? Fantastic. Now, Forex is a game of risk. I already told you, Forex is a game of risk. Okay, we know it's risky. In fact, if you're registering with any broker, the first thing they tell you is trading is risky. That's the first thing. They tell you trading is risky. But the truth is, he who does not take risk doesn't go far in life. Life is a risk. I was telling somebody yesterday, I don't know where the person is. Was it where I was telling about Dangote? Dangote is the highest debtor in this country right now. I hope you're aware. Yes. Oh, you don't know? Are you not aware? Yes, Dangote is owing billions, don't you know? But he's the richest man. Oh, you don't know that Dangote is doing business with your money? Wow. Where have you people been? Dangote is owing money because banks approach him every now and then to give him loans. So he does business with loans, pays them interest on it. But he's still the wealthiest man. The same bank that you go to and ask them to give you 100,000, they will say bring your phone certificate, your birth certificate, your children's certificate, your passport. The same people are going after him. Please come and collect loan from us because he's being productive with the money. So there's something called bad debt and good debt. He's in good debt. Bad debt is the one that your business cannot service. But he's the highest debtor in Nigeria right now, if not in Africa. But he's servicing it. It's good debt because he's doing business with the money and turning over with the money. You think the money he's using to build refineries from? It's our money. You think that refinery money is our money? We put money in the bank, they go and give it to people that are doing business. He pays them maybe 10% interest and gives them back, and they now debit you because you don't know how to use the money on top of your own money. Sometimes I can wake up in the morning, you will see service maintenance. What's that one they call it? Stamp duty. Stamp duty can reach like 700 naira. Ha! So what I'm trying to say is there's nothing wrong in taking risk. Okay, provided you can you can service the risk. Okay, he has assets, of course, that can service all those risks. So risk is part of life. That's what I'm saying. Develop a long-time mindset about trading and be fully persuaded that the gain is an outcome of large numbers. I already said it is a game of large numbers. One trade should not determine your outcome of trading. Okay, losses are part of trading as much as profits too. So how to get capital? Savings, wages, investors, capital pool. When I wanted to go fully into trading, like full time, I didn't want to take all the risk myself. I got a friend. I told him, come, let's do this thing. So he brought money. I brought money, about $200. Then he brought his own $200. Then we started a small capital and we are growing it small. You understand? So sometimes if you want to take the risk alone, find people that will pool money with you and you can start up. Then investors too. I don't usually tell people to get investors once you just learn trading today. You're looking for investors today. Don't put yourself inside trouble that you will not come out from. Mr. Ejimi told us how he lost people's money, millions of naira, and a lot of them told him that they are forgiving him. So this is like 10 years later. He now traveled to Maldives with his wife and posted the picture on Instagram. So one of them saw it, say, Oga, bring us the money. So don't go and put yourself inside problem that you'll be paying investors all your life. I've been in debt before, so I know what it looks like. It's hard alone making money. Talk more of making the money to pay another person. So don't go and start looking for investors just with this one you've learned now. Practice first. Because some people already putting up smart moves. already developing investors vibes. So please don't go looking for investors and put yourself. Then I wrote here very clean. Avoid bank loans and high interest venture capital. Those people that will come and tell you, come, let me give you $2,000, but you'll be giving me 20% in a month. Run away from those people. See, I'm telling you this from experience. So you see these guys that would want to strangle your neck because they gave you one small $2,000 to trade. Run away from those kind. They will put you into serious trouble that you can't come out from. And it's all these people that don't even have much. They're the ones that bother you. Somebody can give you $20,000. It doesn't even bother. But you see that one that will give you that $200. Those guys will stress your life. And they are the ones that want you to turn $200 to 1,000 in 1 month. Run away from those kind of, and also bank loans. Run away from bank loans. Okay? Now, multiple streams of income available in trading. Now, the good news about trading is there are a whole lot of opportunities to make money from trading. That's one thing. Everything you're seeing, I'm making money from all these ways. Everything you're seeing here. Apart from Signal, I think there's Signal channel, this one, which I used to, but I stopped it. But we'll restart it hopefully sometime soon. For all these systems you're seeing here, I'm making money from all these systems. They are more than, they're up to 10. All these systems. So you can actively trade your own money, make money. Make money with portfolio management. In fact, that's like one of the main streams of income for myself, portfolio management. Clients that have money, they fund their trading account, you manage it for them. At the end of the month, they withdraw your own commissions and send to you. Number three, and I also advise, don't take anybody's. If anybody wants to say, come, let me invest money with you, don't take anybody's money. This one is warning now. This one no be financial advice. This serious warning. If anybody wants to trade, tell them sign up an account. Let me come and manage the account for you. At the end of the month, let them withdraw money and give you your own commission. Don't collect shish. I don't have anybody's shish and I will not have it. If you want to join trading, set up your account. I can come and manage it or put it under a multi-asset management system. I manage the account from there because people can be very unreasonable. I've met unreasonable people, highly unreasonable people that will give money to you trade and they can see you give them the trading account password, log in, be seeing the trade if I'm taking it so that you too be seeing it. But if you do mistake and lose that money, they will tell you that they don't care. After all, they sent money to your account, they will send you the receipt, so you see the transfer I did, send the money back. So to prevent unreasonable people, fund your account, me I'll come and trade it. So even if we go to court, I'll tell them, did you see any transfer between us? So be careful out there. I be an affiliate system. I'm making money from that. Tutorials, just like we do in the academy here. Trading tools development. I build robots. I build systems for people to trade. I automate systems for people. Sales of Forex materials, I do that too. Signal subscription, like I said, I stopped this one. Automated trading, my robots are trading 24/7 of the day. Blogging, I'm making money from my YouTube channel. Every video you watch, there's a money I'm making. A small, just very infinitesimal amount of money coming in from that. Investment and trading, hedge fund system, which is like prop firms. Okay, so different ways, you can get investors, friends, and family. That should be like your easiest, the easiest one. If you don't have money to start up trading, you can find an uncle and auntie that can give you small money to start trading. Okay. And number two, online. You can publish your trading results on global platforms like my FX book. If you're a good trader and you have a track record on my FX book, you can link your account to my FX book. It's a platform that takes record of people's trading results. So you can publish your results there. Somebody and use it as proposal. Send somebody the link, check my trading results, and they can see every single trade you've taken and how your capital has grown. If you're consistent with that for 6 months, you can get any investor you want. You understand? Send your trading results to them. They can verify it if they like. Don't give any assurance. Don't tell anybody for sure. If I don't give you 10%, you don't see. I've been in debt. I know things. Though. Don't go and give anybody any form of assurance. Even our portfolio management system, there's a document I give them to sign. The document says that if we lose your money, we are not liable to be sued. If you don't like it, go. We are not forcing you. Before you came, I was making money. So it's you that find me and come. So to avoid trouble, you sign it. If I lose this your money, you cannot sue me. I am not liable to be sued. But there's a clause. We will try our best to make sure that you don't lose your account. You understand? Your safety first. These are mistakes that I made. And I entered into debt that was painful, excruciating to pay. So don't make it. Sponsorships. Sponsorships, sponsorship like somebody sponsoring accounts for you and all of that. I do not advise that very strongly though. Corporate branding, okay, people really like to give individuals to money to trade. So you can form a company, at least have an official modus operandi. For instance, when I was just trading as myself, as Shazo Kamobinwa, I mean, nobody really was interested in what I was doing until I formed a company name. They now knew that okay, this person is really serious. They were now coming to approach, trade for me, trade for me, trade for me, trade for me. You understand? So this is another way. If you can do a corporate branding, it will be easy to. There are three ways to scale your profits. Number one is increase your position risk. That's one way to scale. You can increase your lot size for a trade. Number two, increase your trade frequency. I already told you that trading outcome, results of trading is a result of what's it called? Is a game of numbers. Okay, so if you want to make more money, you might need to trade more. We took 5 trades now. Look at the magic of risk to reward. We took 5 trades, we lost 3, we only made 2, but we are still on profit. If we have taken up to 10, our profit would definitely have been higher than $50. You understand? So this is a game of numbers. So if you really want to make more money, you might need to increase your trading frequency. Now, increase capital. This is like the very best. It's better to increase capital so you can sustain trading 2%. Using a play account, because there are some accounts that are like not really play, of course, no money. Money is money, even if it's $1, it's paying for when you lose it. But sometimes you just lose an account, $200, $500, and just want to double it. So those kind of accounts, we can risk as high as 25%, 50%. But if it's a serious capital you're looking to hold on to, make sure nothing happens to that capital. Don't risk more than 2% on that trade. If you want to make more money on that, increase the capital and maintain your risk per trade. Is that okay? Now, patience is one of the most important virtues. Now, final advice. You have made one of the most important decisions of your life by taking on this course. Anytime you feel like giving up, remember why you purchased this course in the first place. And as you learn and grow in trading, do not neglect and grow in other areas of life. Now, this is a very important one. It's like I said, trading can be addictive. You can be trading and forget you have a family. You can start trading and forget that any other thing is happening in your life. All your mind is this trading. When I was still cutting my wife and all of that, we had multiple problems because of this trading matter. Because and you won't blame them, of course. I mean, women, fear women, but love them. So they might not understand the pressure. You understand? Because as a man, you're trying to stand. You're trying to do what a man got to do. You understand? But they want love. They want time. And this is where I'm spending my time. So sometimes in a day, maybe towards evening, I'll now remember, I have a girlfriend though, and I've not called her. So it was so this thing right here can take over your boyfriend or your girlfriend if you're not careful. So you need to be careful. And then finally, Forex is not for everybody. Simple and short. Why I say it's not for everybody is that it's not everybody that might find it interesting. Like myself, the very first night I heard about Forex, I couldn't sleep, literally. I was awake till 3 a.m. in the morning, watching videos, just binging from one YouTube channel to another because it was interesting to me. I just loved it. I just fell in love with the concept. It made sense to me. Not everybody will find it like that. For some people, maybe after 3 months testing out for it, they will just find out that this thing is be like it's not for me. And there's nothing bad about it. It's not only Forex that can make you a millionaire. There are some other things you can do that can make you a millionaire. Dangote is selling salt. Maybe you can sell red oil. You can still you understand? Of course, he has people trading for him, but then I mean he became a billionaire selling salt and sugar and cement. So you can sell any other thing, can become a millionaire. So it doesn't mean don't force it. If you notice that this is just not for you, find another industry that can help you out. Okay? Did anybody enjoy this class? Please put your hands together. So before you go, I said I was going to tell you people about the academy and what we offer. Like I said, let's be very clear about this. Like I told you from the beginning, as far as I'm concerned, what we're doing here is for legacy. Okay? I want to leave this world knowing that I have touched the life of people. I want to leave this world knowing that people have taken practical decisions based on what I teach and what I do. Okay? So we are not here to rip you of your money or for you to coerce you in any way to join the academy. Okay? But the thing is, what we're doing here is we're trying to build a community of expert traders. We're trying to build a community of expert traders who we can confidently say, this is $10,000, this is $100,000. Manage these funds. Some of my students here knows that I've given them some portfolio to manage and they attended this training just like you too. So what we're trying to do is to build a community of people who we can trust and test and trust their trading style and say that no, this person, we know we can manage the funds. That way we are open to bigger investments. We have more hands to manage portfolios. Okay, so that's one of the benefits of being a part of the academy, joining our academy. We have a basic package, which is where you just, it's like just the basic package where you get all the mentorship, all the training. Now we have a corporate package where you can use our system, our trading robot for yourself and make money for yourself. And also we have a elite package where it's more like a partnership, it becomes like a partnership. You, any single person you refer to join the academy, you get 40% of whatever the person pays to join the academy. And there's a number of people you refer and you can be making up to 60%. For instance, if somebody joins the academy with the elite package, you get 120,000 and we only keep 80,000 because the elite package is 200,000 for to join. Okay, but the basic package, if you just want to learn forex, you don't want any partnership with us of any sort. The basic package is 69,500 at this time. It might go up anytime, okay? But for now, it's 69,500. But I want to do you people one good, okay? Should I make you an offer? Should I make you an offer? After Trader Fair, in Trader Fest, I told you guys that you can join in 50% off. And because some of them were meeting me for the first time, maybe they were assuming this guy maybe he's still a learner trader, he's not really serious. So some of them, it was after maybe 3 days, on some of them 2 days later, 3 days later, maybe after they have watched my YouTube channel, they now come be like, sir, please, that 50% I beg. Okay. But what I can do is at least for between now, if you want to join the academy between now and today is what, Friday. Between now and let's say Sunday night. Between now and Sunday night, if you want to join the account, we're giving you 30% off. 30% off all our student packages. Okay. So another basic benefit you stand to chance is our weekly mentorship. The tutorials is just the basic. The most important part of the academy is the mentorship. Because for some people, anybody can buy any course, forex course online. But the truth is, most of them, nobody really follows you up. There's no follow-up classes after that. You don't get to trade in packs. But the good news is, joining the academy, you have a community of people just like yourself. You can come to the office only for registered students. Can come to the office, join us in our live trading sessions, our analysis sessions. You have a community of people trading together with you. Okay, so it's something to worth considering. But however, like I say, trading is not for everybody. Personally, I even want only serious, but I don't want people that will come and waste my time. Okay, so if it's a good offer for you between now and Sunday night, you can join the academy, 30% off. So for the 69,500 package, you only get to pay, I think, about 40 something thousand thereabout to join. So that gives you full access to mentorship and the classes. This class I compressed for you in 2 days is a class that can take you 2 weeks to watch all the videos. Can take up to 2 weeks to watch because they are much more explained than this. And for you to actually be able to watch it every single time you can. Because at the end, by Sunday night, we'll be taking down the YouTube video and because I mean we gave out a lot of information here for free, man. Okay, and we are generous, but not that generous. Okay, so thank you so much for joining. I really love to see you guys time and again. Okay, any questions? Any question? Okay.
What's the advice for those that work 9 to 5 every day?
O-
Everybody often getting their tax.
Okay. Number one thing, why not? Why not? I went to do full-time trading when I still had my own 9 to 5 too. There are two options. You can either find a signal channel, use our free signals. You can put our notification on premium, or what's it called, so that you just know that this is the only notification you're getting on Telegram. So anytime we post the signal, you just know that this is what is coming. You take the trade, go back to whatever it is you're doing. That's one. Or number two, you can adjust your trading time. You can learn how to trade the currency pairs that are more volatile at night, like the USD JPY, Euro JPY, NZD, AUD. You understand? Those kind of currency pairs that are more volatile in the night. So that between that 11, maybe 10 p.m. to 1 a.m. thereabout, you're done for your trading, you sleep, go to work the next day. You understand? So that's an option for you. Signal channel, or you can trade at night by yourself. Any other question? Okay, so that's it. Thank you all for coming. We are excited to have you. Have a wonderful day.